Hi there, this is Leif Gregerson and Shawn Andrews, and this is the stock market report today with Shawn Andrews.
Okay.
How are you today, Shawn?
Any day I'm above ground is a good day.
Oh, excellent, okay. Now, Shawn, I'll get into a bit of your background. You grew up in Texas?
I did, yeah.
Now, how were things different there from where you live now?
Well, I grew up in the big cities in that area, and usually in a neighborhood not too much unlike this neighborhood. You're near the core, the downtown core. Usually the more wealthy families live in the suburbs around the major cities.
Oh, yeah.
And Texas, they have a booming they have a booming computer industry there.
Oh, okay.
You've heard of Silicon Valley in California?
Yeah.
Well, Texas is called Silicon Alley,
Oh,
a
I
small
see.
version. So.
Oh, okay. And now, did you find it was easier or harder to get wealthy in the U.S.?
I think it's both countries have their own unique challenges, but America is the home of capitalism. So
yep.
there's a bit more support systems for people who set up companies in the United States and provide jobs for Americans.
Oh, I see. Okay. Now, if you were to go to the States yourself and set up a company, like say a small business or whatever, what would you personally want to do?
Well, I know that when you lead a company, you're the general. You're also the foot soldier as well in some cases, and you're the chief motivator. You have to motivate your employees to want to do better. You have to provide them with the best information you can, with the right technology. But you have pretty much sooner or later you're going to have to let go a little bit and let them just get out of the way while they do their work.
Now, if you were to go out and to find, say, 3 employees to run a small business, what qualities would you look for in those people?
Well, strong communication skills is a must.
Okay.
If you can't
everything from typing to speaking, you mean?
Typing to speaking, yes, and basic grammar skills as well.
Mm-hmm.
You have to be able to communicate your mission statement of the company. Okay. You have to tell your employees, how to deal with customers. Customers that can make or break you, and if you have a quality product and you have good customer services and you're willing to work, your employees and you are willing to work hard, there's no stopping you.
Oh yeah. Okay. Now I'm assuming I forgot to mention that. Now, how old were you? 14 when you moved to Canada? 13?
Yeah, 14.
14. Okay. And you went to high school here in Canada, and then Northern Alberta Institute of Technology.
About a year before I went to NAIT, I spent 2 years at the University of Alberta as an undergraduate student. Mm-hmm. My major was chemistry, and even though I did get some good marks in my university chemistry courses, I realized that I wanted to be more hands-on with people. I wanted to deal more with people. Mm-hmm. The thought of me spending the rest of my life in a laboratory mixing compounds and writing down chemical equations with not that much human contact, it didn't appeal to me as much as it once did.
I can completely understand this because if my old chemistry teacher ever saw this, she'd remember the fact that I took grade 12 chemistry 3 times without passing it. And basically I used it as a political platform to argue my own theories with another guy in the class, and who will remain nameless. I enjoyed chemistry and it benefited me greatly, but it's not something that I was made out to do. And certainly you must have been quite intelligent to go as far as you did. Can you tell me more about what you learned in NAIT? Was it a small business type of thing, a big business type of thing? Were they training you to be a CEO sort of, or just all around in general?
Well, it was a 2-year program at the time, business administration programs. Everyone in the business administration program had the same courses in year 1, but in the second year and the final year, basically you could go into finance, like working for a bank or a financial service institution like I picked. Yep. Or you could be accounting, management, or marketing. I chose finance.
Oh yeah, okay. Yeah, I actually might try and run this video by him one time, but I have a friend I went to high school with called Jeff Berwick, and he was the founder of Stockhouse.com, and one of the founding members of the Bitcoin movement, and the guy's pretty big, and he went to NAIT. I believe he went into marketing, but I'm not totally sure. But he went on to become a stockbroker, and it was kind of funny because when he arrived at the gate of becoming a stockbroker after working for a while in the banking industry, he basically decided that they knew less than him about business, and he went on to become incredibly wealthy, and now lives in Mexico and is developing properties in Mexico and Brazil. Let's get on to the markets. Now, how did the market do today? This would be July 3rd.
Yes, since tomorrow is July 4th, it's Independence Day in the United States. I believe it's Independence Day. It's terrible. I came from there and I can't remember. I can't remember the holiday.
Yeah.
But the American markets, the S&P 500, the Dow Jones Industrial Average, and the Nasdaq, the technology index, and Nasdaq, all of them closed at 11 a.m. Mountain Standard Time, Alberta time, about 1 p.m. Eastern Standard Time in Toronto. Basically, oh sorry, go ahead.
Go ahead.
Okay, no, go ahead. Okay,
yeah, I noticed that the price of gold seems to be leveling off, and platinum's gone past gold a little bit, not much, about 1,400 to 1,300, basically. But what's really got me watching the numbers is the price of oil. Not only because family members of mine have gas guzzlers, but also because the Alberta economy is greatly tied to the price of oil. Is there something you can comment about that and where it's going?
Well, the higher price we can get for our oil products as Albertans, ultimately it's kind of two-pronged attack. We make money on the oil we sell to the United States and countries around the world, but at the same time we get bitten by the high price of gas, and which depends on the price per barrel of oil. And although I can see the American Central Bank and the European central banks and the Canadian central banks and their counterparts in the United Kingdom, they will start to gradually raise interest rates. I'm just saying it won't be a very quick jump upwards from where it currently is right now.
Yeah.
So what happens is it'll be very slight increases, and when there's slight increases in interest rates in a country that produces oil, and the interest rates don't keep pace with inflation, things like oil and gold and silver and platinum and the precious metals and food commodities as well will go up in value, but not as much as in value, not as high as it would if interest rates stayed low for an indefinite.
Okay. Sorry, just 1 second. I'm just going to set this so we can. I don't want to go over our time limit here. Sorry.
Okay.
Okay. Oh, we're only halfway. We've got lots of time. Okay, now, what would be the next question? Now, I got a little confused with yesterday's show, and I sort of made this statement that it may not be time to get a good purchase. It may not, you might want to wait and see the indicators and everything for a few months at least. But after the video yesterday, Shawn was telling me that basically the way interest rates being low as they are, it's a good time to buy a house and try and lock in those higher rates. But I don't know, we were also discussing the fact that the housing market has ballooned, whereas the house we're in now would have been worth about $100,000 20 years ago, whereas now it's worth over $400,000. And I just don't see how an average family can support that kind of a debt load, but Shawn seems to think that it's worthwhile. Can you comment on that again, Shawn?
Okay, what I said was, in today's National Post, the financial section, the big Canadian banks, the big five, are raising their interest rates, which usually the higher the interest rates are, the more it costs to pay for a house.
Yep.
But when interest rates are low, and they've been low in North America and Western Europe and the United Kingdom for such a long time.
Sorry to interrupt, but now when the interest rates are low,
it costs less to borrow to buy a house.
Okay, but does that it costs less to buy a house? But when the interest rates are low, it costs less. So does that mean the price of the house would go up?
Yes, because a lot of people are buying houses. Were buying houses in the mid 2000s, and since there was cheap, easy money from the banks at very low interest rates, there was a lot of money chasing the houses, and even though interest rates were low, the price went up because with easy money and everyone buying a house, the laws of supply and demand.
Yeah.
When you have a lot of
now,
money.
I just wanted. Can you distinguish that equation between what happened in the States with the housing bubble bursting and what happened in Canada, and maybe perhaps discuss how the possibility of a housing bubble bursting in Canada has happened in the States. Can you see that happening? Or?
I can see the housing market cooling off.
Mm-hmm.
Basically, in the United States, with record low interest rates, and people and credit being easy to get.
Yeah.
Basically, the prime borrowers did fine. The most credit-worthy customers of the bank, they did fine.
Mm-hmm.
But people who are held subprime mortgages, they're just regular buyers like you and me. People who don't have an established good credit rating because of our ages and our lack of experience in buying a home. Mm-hmm. Basically, what happened was as the banks were making a lot of money and they're charging higher interest rates that they charged their home buying customers, subprime borrowers. Mm-hmm. And what happened was, a lot of subprime borrowers that couldn't afford their minimum payment on the house because the banks were gouging them with the higher interest rates. Mm-hmm. And what happened was, some people, their house was too expensive for them to hang on to.
Oh yeah.
And
and they couldn't sell it.
Well, they
in time to meet the mortgage.
No, what I can see happen in the United States, so far, with the chief of the American Central Bank, the Federal Reserve, Ben Bernanke, the governor of the American Central Bank, what he's doing is slowly letting long-term interest rates creep up. Okay. And when that happens, it costs more to borrow. It costs more to borrow. Less people will be buying cars and houses and stuff like that. So supply and demand, when there's low demand, the price goes down. Yeah.
Now before, when I went to college myself, at the time when Shawn was going to NAIT, Shawn and I were born within a few days of each other despite different countries. But when I was younger, I was going to flying school. And it seems so interesting to me to look at the economy. And interest rates may be your throttle, and then your lift may be your interest rate, your economy, and you have to have wind flowing over your wings to lift in an airplane, and you have to have money flowing through your economy in order to lift, and interest rates being your throttle. That causes an increase in wind, and it's such a delicate balance. Now, can you name some of the key indicators? In a plane, you've got your instruments to guide you. Can you tell me what some of the instruments in an economic situation would be? Do you understand that question?
I do. One of the things I look for when I try to predict the global economy is, consumer debt levels around the world, especially in the Western European countries and North America and the UK, and also the emerging nations, Brazil, Russia, India, and China. I measure consumer debt levels around the world. Mm-hmm. How much debt the consumers are carrying, how much debt the businesses are carrying in those countries, and the debt load of their governments as well.
Okay.
Now, what's been happening a lot lately is that with easy money and very easy credit, a lot of unworthy credit borrowers, people who are subprime, who have a high instance of defaulting on their mortgages, on their other loans,
which would leave the banks holding the bag, basically.
Yes.
Well, sorry, let me just check the time here. Okay, we've got 13. If you could just quickly wrap up, we've only got about a minute to go here.
Okay.
And that'll be all for today. Now, is this something, what you just mentioned with the easy credit causing possibility of defaults, is this something that's occurring more in Canada now?
Well, I think the housing market in Canada is really heating up really fast. Mm-hmm. But when Canada went through its real estate crash in the early 1990s, they passed a bunch of laws. Mm-hmm. Now, Canada's not immune from a real estate bubble, but we're in a better position to handle it than the Americans were.
Okay, well, we're going to have to leave off on that. But we'll make another video for you folks tomorrow, and thank you very much. This has been The Stock Market Today with Shawn Andrews and Leif Gregerson. Please remember to support Valhalla Books and my videos.